In 2025, the rich are flying private, building billion-dollar resorts, and buying entire neighborhoods. Meanwhile, more than 60% of Americans are living paycheck to paycheck.
Record inflation and the cost of living are just the tip of the iceberg when it comes to paying for basic necessities. Tonight, CBS 8's Esmeralda Perez shows us how much more and more Americans are living paycheck to paycheck.
I work full time. He works more than full time. I don't know what to do.
You may have seen this video circulating on TikTok. A woman shares her experience of living paycheck to paycheck in a two-income household.
Half cannot cover a $400 expense.
How many times have we heard about that staggering statistic that nearly 40% or so of Americans can't pay for a $400 emergency?
If you do, you're probably better off than 40% of the country.
And the fastest growing loan category? It's buy now, pay later for groceries.
Imagine buying a couple of burgers and fries and then splitting the cost into multiple payments. That's about to become a reality for DoorDash users thanks to a buy now, pay later service.
We are now seeing stand-up seating on airlines for the poor.
An Italian company, Avion Interiors, has introduced a new type of airline seat that you can't sit on. These seats are designed for short-haul flights and allow airlines to fit 20% more passengers on board, but passengers must stand instead of sitting.
And lie flat luxuries for the top 1%. Welcome to this new class system built into our everyday life. This isn't just about inflation or interest rates. What's happening right now is a full-blown wealth separation, and it's speeding up.
What does wealth inequality really look like in this country? We found that most people have no idea.
In this video, I'll show you what's really going on with real data and what I'm personally doing to protect and grow wealth as the middle class gets squeezed. Because if you think things are going back to normal, they're not. While most Americans are worried if they'll be able to afford their rent, the ultra wealthy are doubling down. Alex Rodriguez just signed a $1 billion deal to build a luxury resort in the Dominican Republic, and this is backed by institutional investors. JPMorgan Chase, America's largest bank, is now expanding private banking operations for the rich. Not just in New York or Los Angeles, but South America, where wealthy U.S. families are taking risk off the table and investing offshore. These aren't vacation homes. This is a wealth shelter protection strategy that JPMorgan Chase is capitalizing on. Since the pandemic, Americans' top 1% have added trillions in personal wealth.
A new billionaire was made every day so far during the pandemic. Billionaires saw their net worth soar 42% during the pandemic, amounting to an increase of $3.8 trillion in new wealth.
And they're not just saving it, they're putting it to work. They're buying up properties, private islands, and buying gold like it's 1971. The game has changed. The wealthy, they're not worried about inflation. They're using it to get rich, buying hard, real assets. They're leveraging debt, investing in real estate, in land, and anything that is proven to hold value over a very long period of time. And here's what they know. If the dollar weakens, if inflation gets stickier, and America's credit takes another hit, they win again. Now let's talk about the other 90%. They're working harder, and they're still falling behind. Credit card debt just hit a whopping $1.13 trillion.
Credit card debt in America has reached a new high, a report released by the Federal Reserve yesterday.
That's not just from shopping sprees, that's from everyday survival, making the minimum payments and adding more and more debt every billing cycle. Americans are putting food, rent, utilities all on a credit card, and then paying 22% interest on top of it all. Auto loan defaults, they are spiking, especially for lower income and lower credit score borrowers. That means people are losing their cars just trying to get to work. And buy now, pay later, it's supposed to be this new safe credit, but nearly 50% of users are already missing payments. And most do not even realize it's a loan. Klarna, one of America's biggest buy now, pay later providers, just reported defaults at 17%. even as their user base continues to grow.
Klarna, one of the industry's biggest players, is seeing red this morning with more of its customers struggling to pay back their loans. The company's losses have doubled since last year, even as it celebrates new partnerships with places like Walmart and DoorDash.
That means nearly 1 out of 5 people that borrow money using buy now, pay later do not pay it back. This isn't just financial stress, this is a structural pressure. Wages have not kept up. Costs are outpacing paychecks. And when the wealthy and the rich buy assets, everybody else will rent them at much, much higher prices. So what happens when money runs out? Well, people get desperate. Debt traps, eventual default, credit scores continue to erode. It gets harder to get a loan. Life gets harder. So how did we get here? How did the gap get this wide, this fast, in this short period of time? Today's billionaires often pay less taxes than a typical nurse or a teacher.
It is not right that teachers and nurses and firefighters are paying a higher tax rate than billionaires.
Because their wealth is not usually taxable income. It's asset growth. It's stock shares. It's their investments appreciating over time. It's strategic plays that have been carefully executed. And all of these plays are done so usually with a great accountant, a tax team, a legal team, to offset tax liability. States are joining in. Missouri just slashed capital gains taxes, a big break for people that already own things. Meanwhile, the federal minimum wage has not increased in over a decade. Inflation's up, rent's up, grocery prices up, wages flat. Every lever, tax breaks, asset inflation, and loopholes designed to protect and reward those with assets. If you're working for money rather than having assets work for you, you're playing a different game. This divide, you don't need charts to see it. You can feel it every time you fly, every time you shop, and every time you try to live a normal life. Airlines are literally testing stand-up seating for the poor. Meanwhile, private jet use is at an all-time high. In 2023 alone, there were over 5.5 million private flights. This is the most in history. You turn left on a plane, get a full bed, a nice cold bottle of champagne. You turn right, you might not even get a seat or one that reclines. Same story on the ground. Luxury condos selling for 10 million plus before they're even built, while nearly 11 million renters are spending more than 50% of their gross monthly income on rent alone.
Half of all tenants nationwide spent more than half of their income on rent and utilities.
Even how we shop is splitting. High-end neighborhoods are now getting robot delivery as well as zero-fee returns on their online shopping. Poorer ones get shuttered stores and rising theft. This is what economic segregation really looks like. Same city, same country, two completely different worlds. Here's the part they do not put on the news. The big shift, it hasn't happened yet. Over the next 20 years, a record $84 trillion in wealth is set to transfer hands inside of America alone. Half of that is going to the top 1.5% of families. For most people, wealth used to come from work. Today, wealth comes from ownership. And if you don't own anything, the future is going to feel like a treadmill with no end. Because this isn't just about getting rich, it's about not getting left behind. This system is not going to save you. But once you understand how it works, you can play the game differently. That's why I'm making changes right now. I'm not waiting for some miracle fix or some government policy or someone to come save the day. I'm aggressively moving forward towards ownership, buying assets that produce income, building income streams, and protecting and providing for my family. We are buying houses inside of nice, safe, quiet, affordable neighborhoods in areas that I believe are going to benefit due to the rising cost of living, this affordability crisis, and this major and structural shift that is now unfolding inside of America that I think will grow rapidly over the next 4 to 5 years. I think we are going to see so many people, retirees, relocating to affordable markets. You have a lot of renters simply can't afford to rent where they live, but they can afford to buy in certain markets. Those affordable markets that offer a great standard of living, I believe are going to benefit immensely over this. I've relocated my entire family over what I think is going to be this big change that's coming here to America. I think many people would say, you know what, this is very unlikely, but other people that are really paying attention see that this is without doubt happening. All these changes from airlines to how people spend their money, this massive divide between the have-nots and the have-yachts is getting more and more clear by the day. So those that are taking action will position themselves far greater than those that think that they can work out of this problem. There's no way that even if you're making $20, $30, $40, $50 or $100 an hour, in the next 2, 3, 4 years, as the economy continues to move in this direction, that one will be able to live and provide a great standard of living for themselves and their family off of that income. You have to invest, you have to own, and you have to position yourself to capitalize on what comes next here in America. If you'd like to learn more about what we're doing, you can click the link in the description just below this video if you have 100K or more. Now catch you next video.